Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 healthcare stocks with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we use the TipRanks Stock Screener to find 3 stocks in the healthcare sector that come in with unanimous strong buy ratings. So today we're going to take a look at these companies, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. You can follow along over on tipranks.com or on the TipRanks mobile app by using the links in the description down below. Let's jump right into today's 3 healthcare stocks. First on the list today is a company called HealthEquity. They trade under the ticker HQY and are currently priced just shy of $80 per share. Overall, in the past year, the stock has seen growth of over 22% and has climbed over 19% in the last 3 months. HealthEquity provides a range of solutions for managing healthcare accounts. Founded back in 2002, the company's mission is to help connect health and wealth. They focus on HSAs, or health savings accounts, and their goal is to make HSAs as popular than 401ks by 2030. They serve over 14 million members and 120,000 plus organizations and work as a non-bank HSA custodian. With over 5.5 million HSA members, they have over $11 billion in assets under custody. HealthEquity's next quarterly report isn't due out until March 18th. This does follow a quarterly beat back in December, but the company is also hosting an investors event that is happening tomorrow on February 22nd. And ahead of this, the company did release some key metrics. An analyst from Wells Fargo weighed in on these metrics back in January after they were shared, saying that they provided an updated HSA sales outlook related to their accounts and custodial balances, and that all key metrics for fiscal year-end 2024 track ahead of the firm's estimates. For their investor day, the firm is expecting the company to perhaps detail their enhanced rate strategy, potentially debut some products associated with the digital wallet, and possibly establish longer-term guidance. Taking a look back at their third quarter in December, the company did come out with an earnings beat. HealthEquity reported earnings per share of 60 cents, beating expectations by 10 cents per share, and quarterly revenue of $249.2 million, which did increase 15% year over year. Back in the fall, an analyst at Guggenheim did name the stock one of their best ideas. And more recently, just last week, we had an analyst at Bank of America increase their price target. The analyst noted the investor event taking place tomorrow, saying it was their first event of the kind since 2019, and says that the firm doesn't think investors are expecting material news, which is noteworthy if there is a large announcement. HealthEquity is currently rated a strong buy with 13 analyst ratings. And of course, those all came in with a buy and an average price target just shy of $89 per share, which would be an upside potential of over 11%. Down below, we can see the more recent ratings here, ranging from an upside of 5 all the way up to 19%, and on the low end, some buy ratings back in December that this price has already been surpassed. Our second unanimous strong buy stock is Tenet Healthcare. They trade under the ticker THC, currently priced at $91 per share. They've seen some big growth this year, up 53% overall and 34% in the last 3 months. Tenet is a healthcare services company that owns and operates a range of facilities. They operate hospitals, diagnostic imaging centers, ambulatory surgery centers, and related healthcare facilities, along with their subsidiaries and affiliates worldwide. The business operates under 4 main segments, including their United Surgical Partners International, their hospital segment, Conifer Health Solutions, and their shared services with the Global Business Center. With over 100,000 employees, they have 58 acute care facilities and about 640 outpatient centers and other facilities. Tenet just shared strong Q4 results on February 8th, along with some other updates regarding their businesses. Q4 revenue of $5.38 billion came in ahead of expectations, and earnings per share of $2.68 beat estimates well over $1 here. The company also noted that their consolidated adjusted EBITDA grew 12.8% over the fourth quarter the year before. On top of that, the company announced that they completed the sale of 3 of their hospitals in South Carolina for $2.4 billion, and that they had entered into another agreement for the sale of some hospitals in Orange County and LA for $975 million. Following that report, we had a handful of analysts increasing their price targets on the stock, including one from Cantor Fitzgerald. They noted that the company's 2024 guidance was conservative, with potential for upside in the hospital segment, and they see the recent pressure on Tenet and their peers related to concerns of surgical demand as overdone. Another analyst from Wells Fargo increased their price target, saying that there was improved underlying estimates and the recently announced California divestiture. They said that valuation is above recent averages, but think it's justified by improving business mix and leverage. Tenet's strong buy rating comes from 13 unanimous buys. Their average price target of $105 would mean upside potential of over 15% from current prices. Looking down below at all of our recent ratings from February, on the low end we do have a buy rating that has a slight downside at over 6%, and on the high end we have an analyst at UBS with a price target which would have an upside of over 50%. And third on our list today is Immunovant. Trading under the ticker IMVT, the stock is currently priced at $36.65 per share. And looking at the past year, you can see they took a big jump up here at the end of September, overall gaining 102%, but they've been trading fairly flat here over the last few months, some ups and downs, and up 11%. Immunovant is a biopharmaceutical company focused on autoimmune diseases. They are a clinical stage immunology company dedicated to enabling normal lives for people with autoimmune diseases. As trailblazers in anti-FcRn technology, they're developing innovative targeted therapies to help meet complex and variable needs. They have two investigational products, their batoclimab and IMVT-1402. They're novel, fully human monoclonal antibodies that target FcRn and may reduce harmful immunoglobulin G antibodies. That big jump up in stock price back near the end of September was in relation to the company announcing that they had positive phase 1 data for their IMVT-1402. Now, last week, the company did report their latest quarterly earnings, and they came out with a narrower than expected loss. For their third quarter, the company reported a loss of 29 cents per share, which was narrower than the 43 cents expected. And they also went over their plans to initiate 4 to 5 potentially registrational programs for IMVT-1402 over the next fiscal year. Their CEO said that they've laid a strong and exciting foundation for Immunovant. One analyst at Citi said that Immunovant still remains one of their top picks. The analyst notes that while there has been some frustration given the lack of detailed information around the development plans of their one drug, they continue to believe that limited disclosures ahead of clinical readiness are a prudent and necessary strategy for Immunovant to maintain a competitive edge. They said that their plans set a rapid development pace that should be viewed favorably, and that Immunovant remains the analyst's top pick with a buy rating. Altogether, the stock has attracted 12 buy ratings from Wall Street analysts. And that strong buy comes with a price target just shy of $52 per share, which would be an upside potential of over 41%. Down below, we can see all the recent ratings in the last couple of months here, all in the double-digit upside potential. On the low end, we have a price target with an upside of 31%, and our high-end price target goes up to 56% upside. So that is a quick look at 3 stocks in the healthcare sector, all coming in with unanimous strong buy ratings from Wall Street. Let me know your thoughts on these 3 companies in the comments down below and which one you like the most. I always appreciate hearing from you guys. Of course, please remember these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at, so please make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.